From trade disputes to industrial policy and supply chain reshoring, U.S. pressure on Canada is growing. As Washington tightens its economic strategy, Canada faces a tough question: adapt, resist, or reinvent its economic model altogether. This video explores whether Canada's current path is still viable. Is the United States pushing its closest ally, Canada, into a corner? It's a question that's bubbling up more and more, especially as we look at the economic landscape of 2025 and beyond. For decades, the Canada-US relationship has been the bedrock of Canadian economic policy. But now, with growing pressure from Washington and a rapidly changing global order, Canada might be on the verge of a major rethink. Let's start with some background. The United States is, by a huge margin, Canada's largest trading partner. Over 70% of Canada's exports head south of the border. This integration has been incredibly beneficial, creating a stable, predictable market for Canadian goods. But this dependency has a flip side. When the U.S. economy sneezes, Canada often catches a cold. And lately, the U.S. has been doing more than just sneezing. Recent American policies, particularly the Inflation Reduction Act or IRA, have sent shockwaves through the Canadian economy. The IRA offers massive subsidies for green technology and manufacturing, but only if it's made in America. This puts Canadian companies at a huge disadvantage. Suddenly, building a new electric vehicle battery plant in Ontario is a much harder sell when there are billions of dollars in incentives available just across the border in Michigan or Ohio. This isn't just about competition. It's about a fundamental shift in U.S. strategy. America is doubling down on protectionism, prioritizing its own domestic industries above all else. This America First approach, which started a few years ago, is now deeply embedded in its economic policy, no matter who is in the White House. For Canada, a country built on the principles of free and open trade, this is a wake-up call. The reliable partner to the South is now a fierce competitor. So, how is Canada responding? Initially, there was a scramble to match the U.S. subsidies. The Canadian government announced its own multi-billion-dollar deals to attract companies like Volkswagen and Stellantis. But many analysts are now saying this is an unsustainable game. Canada simply doesn't have the financial firepower to go dollar for dollar with the U.S. Treasury. It's like trying to win a bidding war against a billionaire. This is forcing a deeper conversation in Ottawa and across the country. Is it time to diversify? For years, politicians have talked about strengthening trade ties with other parts of the world, especially Asia, but progress has been slow. Now, the urgency is palpable. This brings us to a crucial piece of the puzzle: China. The relationship with China is complicated, to say the least. Political tensions have made a comprehensive trade deal difficult. Yet, from a purely economic standpoint, the logic is clear. China is the world's second-largest economy and a massive market for Canadian resources like lumber, grain, and minerals. Many in the Canadian business community are looking at the data from 2025 and seeing a missed opportunity. While exports to the U.S. face new headwinds, the demand from Asia continues to grow. From a global logistics perspective, Canada is in a unique position. It has ports on 3 oceans: the Atlantic, the Pacific, and the Arctic. The Port of Vancouver is Canada's gateway to Asia, a critical hub for shipping goods across the Pacific. On the East Coast, Halifax offers a direct route to Europe as global supply chains continue to shift. Canada's geography is a powerful asset. The challenge is building the infrastructure and the political will to capitalize on it. We're already seeing some interesting moves. For example, there's a renewed push to develop Canada's critical mineral resources. These are the elements needed for batteries, electronics, and green technology. The world needs them, and Canada has them in abundance. The strategy here is twofold. Supply the US market, which needs to secure its supply chains away from China, but also supply the rest of the world. This is a way for Canada to leverage its natural wealth without being solely dependent on one customer. Looking ahead to 2026 and beyond, we can see a few potential paths for Canada. The first is the path of least resistance. Continue to align closely with the US, hoping for special exemptions and carve-outs from protectionist policies. This maintains the status quo but also deepens the dependency and vulnerability. The second path is a more ambitious one, a genuine pivot. This would involve a massive, coordinated, national effort to build new trade relationships. It means signing and, more importantly, implementing new trade deals with Asian and European partners. It means investing heavily in infrastructure like ports, railways, and pipelines to get Canadian goods to global markets efficiently. This path requires a bold vision and a willingness to navigate complex geopolitical waters. A key part of this pivot would be repositioning Canada on the world stage. Instead of just being America's neighbor, Canada could brand itself as a stable, reliable, and democratic trading partner with vast resources and a highly skilled workforce, a bridge between North America, Europe, and Asia. This is not about abandoning the United States. That relationship will always be paramount. It's about rebalancing the portfolio. A smart investor doesn't put all their money into one stock, no matter how reliable it seems. They diversify. For Canada, its economic future may depend on applying that same logic to its trade relationships. The pressure from the US is not necessarily a hostile act. It's a reflection of a changing world where every country is looking out for its own interests. This has forced Canada to look in the mirror and ask some tough questions about its own economic identity. Is it simply the 51st state in all but name, or is it a truly independent global player? The decisions made in the next year or two will be critical. They will determine whether Canada continues down the familiar path or charts a new course for the 21st century. The pressure from Washington may have been uncomfortable, but it might just be the push Canada needed to unlock its full potential on the world stage. The coming years will be fascinating to watch as Canada navigates these challenges and opportunities, shaping an economic model fit for a new global era. Thank you so much for watching. What do you think Canada should do? Let me know in the comments below. And if you found this analysis interesting, please hit that like button and subscribe for more content on global economics and politics. We'll see you in the next video.